Meta is down just over 13% in the past month, falling to the bottom of the pack compared to the rest of the Mag 7. With the market cap hovering around 1.5 trillion, the big question is, does Meta now represent a strong buying opportunity given its massive social media dominance and growing investments in AI? Or is the market pricing it exactly where it should be? As a CPA, I'll help you break down these questions and walk you through my research on why this could be a solid opportunity. Much like Google, which we covered a few months ago and has since gained over 50%. So if you enjoyed this kind of analysis, don't forget to drop a like and subscribe to the channel. And with that, let's dive right in. Let's start off by looking at their latest Q3 earnings results. Meta Platforms reported strong revenue growth in the third quarter of 2025, but faced a sharp drop in net income due to a one-time tax charge. The company generated $51.24 billion in revenue, up 26% year over year, driven by continued momentum across its family of apps, Facebook, Instagram, WhatsApp, and Messenger, where ad impressions rose 14% and the average price per ad increased 10%. Operating income came in at $20.54 billion, reflecting a 40% operating margin, slightly lower than last year's 43% due to rising costs. Net income dropped to $2.71 billion, or $1.05 per share, primarily because of a $15.93 billion non-cash tax charge tied to US tax law changes. Excluding this charge, Meta's adjusted net income would have been around $18.64 billion, with earnings per share near $7.25. As you can probably tell, Meta had a really strong quarter. However, the main concern for investors this time around is the decline in margins, largely driven by rising costs tied to AI investments, which are still difficult to quantify in terms of direct revenue impact. Unlike other tech giants such as Microsoft and Google, which have established enterprise cloud services to monetize AI, Meta currently lacks a clear immediate revenue stream directly linked to its AI initiatives. This has led some Wall Street analysts to question whether Meta's aggressive AI spending will generate meaningful financial returns in the near term. Year-to-date CapEx has more than doubled compared to last year, raising further concerns about margin compression and short-term pressure on free cash flow. That said, I believe these investments are crucial for Meta to remain competitive in the rapidly evolving AI landscape. Over time, this spending should help drive stronger revenue growth as Meta's models mature and AI becomes fully integrated across its family of apps. Let's jump into Meta's current valuation and see how it stacks up against its peers. Looking at forward PE ratios, Meta is trading around 21 times earnings, compared to 26 times for Google, 32 times for Amazon, and 30 times for Microsoft. In other words, the market is still valuing Meta like a cyclical ad platform, even though it's evolved into one of the largest AI compute ecosystems on the planet, built with the most engaged network ever created. That's why I don't believe a forward PE of 21x truly reflects Meta's long-term potential. The company reaches over 3.5 billion people every day through Facebook, Instagram, and Reels, and as AI continues to roll out across these platforms, it could transform user engagement into a powerful commerce engine, unlocking entirely new revenue streams. When performing a comparable analysis using trailing PE figures from Meta's peers, I arrive at a price target of around $736, which represents roughly a 16% upside from current levels. Even after applying a 10% margin of safety, there's still about 6% potential upside remaining. Given this setup, if the stock were to pull back further, I'd view it as a great opportunity to continue dollar cost averaging into my position, because by almost every metric, Meta looks undervalued right now. And Wall Street seems to agree. Out of 68 analysts covering the stock, more than 60 rate it as a buy or strong buy. Even more impressive, the average price target sits around $843 compared to the current share price of about $622, applying an upside of roughly 35%. So friends, if you enjoyed this video, drop a thumbs up and subscribe to the channel. Let me know your thoughts on Meta in the comments below, and as always, thanks for watching. I'll see you in the next one.